please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Just look at some of these stocks. Canfin Homes has suddenly surged up almost about 4-5%. DHFL is up about 2-3%, and Ashok Leyland has hit a new high once again. Mitessh Thakkar and Rajat Bose are with us. Mitessh, what stocks would you be buying now?
Yeah. So I have two buy calls. INFIBEAM, I think, looks interesting to me. The intraday chart pattern is quite positive. So buy with the stop at 160, look for a 173 kind of target. And Adani Ports, there was some positive news. It's open with a gap up. So I would be a buyer there as well. Keep a stop at 412, look for targets of 433.
Okay. Rajat Bose joins us. Good morning, Rajat. What are your trades today?
I would say I have three buy calls. One is Dewan Housing, stop below 560, 575 and 579 are the two targets. And then PVR, I would put a stop below 1435, 1468 and 1479. And finally, McDowell February futures, I would put a stop loss below 3275, 3363 and 3414 are the two targets. And one thing I would like to say is this, that look at the Nifty PSU Bank Index. Unless that crosses 3525 and sustains above that, it is likely to fall. And actually, there are some very negative signs on that, and it is probably going to hit 3100 before it crosses 3500.
Okay, there's clearly a lot of gains right now. A lot of stocks making highs of the day. Cholamandalam Finance, for example, is at the high point right now. Dalmia Bharat is at high point. Reliance, by the way, Reliance has made a high of the morning, so that stock also looking quite good. Ashwani, thoughts on Reliance?
So Reliance did fairly well yesterday also before the entire market fell. So my sense is 980, 1000, which is the top end of Reliance's range, that can happen. And that is another reason why this market is showing so much stability, because Reliance and IT, they tend to put up their hands whenever the banks get into trouble. But I think banks are likely to have a good day today.
Oh, they're having a field day already. The Nifty Bank is almost racing to a 1% high at this point in time. And big gains coming in from ICICI, yes, even SBI. And, okay, HDFC and HDFC Bank are not the biggest contributors. But these three, ICICI, yes, and SBI are taking the Nifty Bank higher.
Oh, yes, they are. In fact, a lot of stocks moving up. Let's discuss some numbers now. Apollo Hospitals, thanks. Let me first thank our technical gurus for joining us. We'll speak with them again later. Thanks, guys. Apollo Hospitals' Q3 earnings were in line with street estimates, but the profit was impacted due to higher depreciation and finance costs on account of new hospitals like the Navi Mumbai Hospital coming on stream. Akhileshwaran Krishnan, the CFO of Apollo Hospitals, joins us on the phone line to talk about that. Mr. Krishnan, good morning. Can you first take us through your overall performance this quarter and what's the expectation down the line?
So the quarter numbers came in well. We did 1896 crores of revenues for the quarter, standalone, and 2,139 crores in terms of consolidated revenues. The growth is 15% year on year. If you actually adjust for GST, which actually impacted on the standalone pharmacy reported numbers, because we have to report it net of GST and as opposed to net of VAT earlier, which was GST being higher. So now if you look at it, SAP actually grew by 19%, whereas we reported 13% growth on SAP.
Krishnan, good morning. Could you take us through the performance of both the matured hospitals and also the new hospitals?
So mature hospitals growth has been, has been 8% for the quarter. And the important thing is we have been able to, if you look at the same last year, we were at a 21.2% EBITDA, same quarter last year. This year we have been at 21.3%. So we have been able to maintain the EBITDA margins on this despite taking the impact of some of the regulations that we saw in the last couple of quarters. One has been the impact of stent pricing. There has been an impact of GST, which we have already absorbed. So all of that, even after absorbing all of that, we have been still able to come in with a 21.3% operating margins on healthcare services. Yes, we do plan to take it higher over the next year. Our target is to get it to higher by at least 100 basis points over the next year. And, if you look at the standalone pharmacies, they have also come in well at 4.5% EBITDA margins. New hospitals did very well. The growth on the new hospitals, which was your specific question, has been 37% year on year. And this has been aided by across the board performance of all our new hospitals, where we have 13 new hospitals which we have added in the last couple of years, and over 2,000 beds that we have in these new hospitals. They have done a 37% year-on-year growth, aided by also New Bombay, which has done almost close to 100 beds occupancy now.
Okay, just hold on, Mr. Krishnan. We've just got news coming in from Axis Bank saying that they sold down all the transactions that they did, all the loans that they had issued against the LOUs from Punjab National Bank. So this is an important news coming in from Axis Bank, and the stock is reacting positively. But we had already reported that. Yeah. Ritu had said that Axis Bank had exposure, but they had sold down their exposure, and therefore now the market is reacting positively to that news. Of course, makes you wonder whether somebody was in the know of this crime even earlier. Okay, we'll of course keep coming back to this fraud repeatedly. But Mr. Akeshwaran Krishnan, what were the occupancies, average revenue per bed, average length of stay in the third quarter in all your hospitals?
Overall, if you look at the occupancy, we were at around 65% occupancy for the quarter. And if you look at the breakup of that, new hospitals were at 53% and existing hospitals were more like 67, 68%. And the average revenue per occupied bed has grown year on year by 5%. And now if you look at the average revenue per occupied bed, we are more at around 32,600 rupees. And that's because of the focus that we have had on high-end surgeries and including neurosciences, oncology, etc., where we have seen good growth.
Okay, how much did the recently commissioned Navi Mumbai hospital contribute this quarter? Was there a loss, and is that something that could be impacting your margins as well?
Yes, so the EBITDA margins, if you look at the new hospitals this quarter, we have reported a 10 crore EBITDA margins in our overall as a company from the new hospitals for this quarter. This 10 crores is actually after absorbing a 10 crore loss of Navi Mumbai. So if you actually excluded the Navi Mumbai losses, it would be 20 crores of EBITDA that we had ex of Navi Mumbai. With that said, Navi Mumbai is doing very well, and we hope that the EBITDA losses in this quarter should be much lesser than last quarter. And as we move into Q1, we are quite hopeful of getting closer to break even.
Okay, finally, take us through the pharmacy segment performance and specifically on the margins.
So overall, 4.5%, the important thing in pharmacy that I think we need to now start looking at is the ROI and the ROCE. Interestingly, now the pharmacy business has done, we have, over the past 3 years seen it, go from a 5-6% ROCE business now to almost around 18% ROCE. So clearly, with the same store growth that we are able to still get of almost around 12%, I think, we should be able to continue to see the ROI and ROC of pharmacies expand, especially as the overall EBITDA margins of this segment moves from 4.5 to 5 to 5.5 over the next few years. The growth has been, so the number of new stores that we have added this year has been over approximately around 298, actually exactly 298 stores, and we closed 5 stores. So pretty much, the number of pharmacies that we have across is now 2,850, and we are hopeful of getting closer to the 3,000 store number by end of this year.
Okay, Mr. Krishnan, we leave it at that. Thank you for joining us.
Well, lots of stocks surging right now. Just take a look at the intraday chart of Jubilant FoodWorks. It's corrected quite a bit in that market correction, and now big move right now on that stock, up about 3%. But Manisha is here with a quick roundup of all the commodity market action. Manisha, good morning again.
Morning, Anuj. Thank you so much for that. Well, let's start with the crude oil prices, and we are looking at very strong gains coming in for that one. Even as the global prices are trading 1% up in Asia, the Indian markets, of course, are trying to make use of the overnight gains as well. So more than 2% gains on your screens onto that one. You have seen global equities gain up. The US dollar has declined. The US weekly inventories have surged less than what the street was expecting. And then you have the OPEC members talking about further agreement and commitment to production cuts, and all of that really finding its way into prices. So good gains continuing into this one. The precious metal space also has seen some strength come in. The US inflation numbers are good. The US dollar index has declined, and that's adding premium to those prices as well. We saw nearly 0.5% of gain in the precious metal prices overnight, and Asia is looking at more follow-through buying coming in this space. In the base metal prices, it really is quite a mixed picture, really. We have seen the copper prices continue to trade on the higher side. It has gained nearly 6% in this week itself. The other metal to keep an eye on, of course, is the zinc prices. We saw a fresh 10-year highs onto that one in the overnight markets. Some bit of a profit-taking coming in on your screens, but nickel is yet another gainer. After 4.5% gains overnight, you are looking at yet another 0.5% gains for this one as well. There has been buying ahead of China, and the markets are looking at lower volumes in Asia and more, exaggerated moves coming in, and that's yet another reason that you have seen those buys come in. Trading strategies, and we have all buy calls come in from Grow Value for the day today. Starting on with the metal space, they have a buy call coming in for aluminum, 144, an upside target coming in for that. They also have constant buy calls in copper prices. 466 is the level that they're watching out for that one. And crude oil price is yet another buy. 3,940 is an upside target.
Well, that's the story that we have been chasing for the last 24 hours, and we will get you all the details as they unravel the Punjab National Bank and other banks case involving Nirav Modi and the Gitanjali group of companies. But it's earnings season, and we are still tracking some of the numbers. One of the good set of numbers that came in was that of Shriram EPC. It's a turnaround story, actually, and that story continues as the company is now on track to report an FY18 profit. T. Shivaraman, Managing Director, CEO, Shriram EPC, joins us now. Good morning, Mr. Shivaraman. Thank you very much. Take us through this turnaround. What led to this doubling of revenues and to this swinging back to the black?
Yeah, I think revenues have been up thanks to good order flows in the last year. So we have currently, after doing about 750 crores of top line this year, we still have a backlog of about 3,200 crores. And we see good traction on new orders going forward. So I think the EPC market is good for us, the order flow is good for us, and we are able to maintain and improve our top line. Bottom line, of course, has improved dramatically thanks to certain restructuring activities that happened in the last year. So we have kind of straightened out our balance sheet, and I think we are well positioned to grow going forward. We see a lot of activity in EPC. We see a lot of activity in our chosen space of water and infra. Steel is also coming back, and international markets also looking fairly okay. So I think we're quite optimistic about the future.
Okay, I'm going to come to the order book in a bit, but before that, the company was under CDR, right? Corporate debt restructuring. So with the new RBI norms coming on board, what happens with the company's loans and restructuring now?
I think the restructuring is pretty much done. We have not formally exited the CDR process because there are still a few boxes to be checked. But we are operating pretty much as a normal company right now. So we have still to study the new RBI guidelines and understand them fully. But I don't think it will have a material impact on our operations as we move forward.
So can you just tell us, you did indicate that orders are picking up. What exactly is the order book right now, and what does the order pipeline look like over the next, say, 6 to 12 months?
Yeah, the order book is about 3,000 crores. About 40% of that is domestic orders in water and related infra businesses. The balance is almost evenly split between our international business and our P&M and power business. Where we are seeing a lot of traction is in water. We see a lot of activity happening in the water space across India. I think states are spending a lot of money on water and infra, and that's where we see most of the new orders coming in. International orders will be, shall we say, will be choosy, and we can't really predict the flow there. But on the water side, it's quite predictable. We see pretty much it's an infinite market. It's a question of how much we can digest, how much we can support in terms of banking facilities and our own internal team. So I think we will grow at the pace that we want to grow. It will not be market determined in that sense.
Okay, Mr. Shivaraman, a word on the finance costs. Big reductions, 29 crores versus 152 crores. So going forward, what's likely to be the
basically trend? The banks have converted a lot of their debt into equity in the company. So I think the finance cost will be broadly in line with where we are now. I don't see a substantial reduction in debt going forward. We will see obviously some debt coming down as we pay down some of our longer term loans. Working capital loans will obviously be there. It's our target to see how much we can bring our debt burden down, but that will take some time. But going forward, we can expect finance cost to be around the same level as we are now.
Okay, and can you throw any light on revenue growth as well as margins?
Margins, I think, see, revenue growth we will grow. Obviously, the EPC business is you can't exactly predict what's going to happen 2-3 years from now. We can see we have visibility for the next 2 years. And we see substantial opportunities to grow the revenues over the next couple of years. The international project, we are just kind of getting into stride on the Oman steel plant project. So we will see a lot of revenues from that project coming in over the course of next year. We have a few good water projects which are relatively shorter gestation period projects. So those will also throw up a lot of revenue. And we are basically working in certain clusters in the water sector in Jharkhand, in Bihar, in Karnataka, of course, Tamil Nadu. And we see quite a bit of government expenditure happening in those states. And therefore, I think new orders will come in. And the advantage in the water business is that the gestation time between the order coming in and revenue is actually hitting the books are pretty short, because the engineering activity is not very complex and we're able to start implementation fairly quickly. Unlike the power and steel businesses where there is quite a long lead time before an order win actually translates into revenues.
All right.
So I think we are quite bullish. I don't normally want to share numbers, but we are quite bullish going forward.
All right, Mr. Shivaraman, thank you very much for joining us with all those details. It is a turnaround time for Shriram EPC, actually for the last 2 quarters. We have to wind down on BAZAAR with the news that markets have bought the first dip and have gone on, clearly putting, at least for the moment, the impact of the big PNB.
And I just want to make one point. There's quite a bit of surge happening right now in tire stocks, led by CEAT. Just pull out the intraday chart of that stock. We discussed it yesterday as well. I mean, the way you've seen big rubber prices falling. I think that trend is continuing. So CEAT, I think, has moved to the high point. A lot of mid caps, in fact, are doing well at this point in time. The mid cap index itself is also up about 0.5%. So
I just want to leave one worry on the table. I mean, I know PSU banks have fallen enough and probably have discounted a lot of bad news. But today the Indian yields are also up about 5-6 basis points. All this is, mark-to-market losses, and then there is a problem of higher provisioning. I mean, there are problems there, and we have not quite estimated everything into the book value. It's impossible. The book value is moving so quickly. Moving lower so quickly. So, I just want to put that caution on the table. This week has not been a spate of good news. Not the yield movement, not the new provisioning rules, not the, news of poor risk systems. I just want to put that caution on the table. At some point, everything is priced, but I don't know if you've really reached there.
Okay, I don't think the market is very concerned about a lot of those things right now. So let's do one thing. Let's end BAZAAR on that optimistic note, and let's allow Chartbusters to take all the market action forward. Thanks for watching.